Welcome to the Abundant Accountant Podcast. This is where accounting professionals just like you learn all the ways to grow their firm, sharpen their skills, and have consistent increasing sales. I cover topics such as detaching from the emotional side of the sale, having paradigm shifts in the most important part of your business, which is the nucleus of your accounting firm, sales, and how to see an objection really as an asset and stop giving away your time for free for those that don't deserve it, so you can actually get paid your value and your worth and grow your top line revenue. You'll learn tips, sales strategies, as well as hear from personal interviews from successful accounting professionals. This podcast will show you exactly the blueprint on how to create the firm and life of your dreams full of abundance. Welcome to the Abundant Accountant Podcast. Today, we have a very special guest, and our special guest is a recovering CPA. He started his career in 1984 with KPMG's Private Business Advisory Services in San Francisco. And today, he is now the founder of VeraSage Institute, the leading think tank dedicated to educating professionals internationally, a radio talk show host on voiceamerica.com, and he's also with the show, The Soul of Enterprise Business in the Knowledge Economy. Our special guest has also authored 7 books, which you can find on Amazon. But before we welcome our special guest to the show, I know so many of you are smart, hardworking tax, bookkeeping, and accounting firm owners. And you currently think that the way to get new clients or retain current ones is to just keep your fees really low, do free work, or simply just work more hours. But it's really not true. What we know is that ends up in burnout and growing resentment for clients for the work that you do. The firm owners I work with, they charge premium fees by ethically doubling and even tripling their fees to current clients by following a much newer and far simpler method that I've created here at the Abundant Accountant, which allows firm owners to charge higher fees with confidence, get paid up front, and that results in doubling their firm fees while working less and having total financial security, more disposable cash, and freedom. If you are ready to make those changes and start creating the firm that you've always dreamt of, book a call with me and my team at theabundantcall.com. And now let's welcome our special guest, Ron Baker, to the show. Welcome, Ron, to the show.
It's great to be back, Michelle. Thanks for having me.
Yeah, thank you so much for being here on the Abundant Accountant Podcast. It's always an honor to have you and have you back again, and hopefully many more in the future. I think you're just I just told you, you're such a great storyteller, and I think one of the best ways to learn is through story. And I know today we're talking about staying at the leading edge and how the strategy and positioning in your firm will keep you at the leading edge. But what happens, Ron, if someone doesn't know you? Can you share who you are just for someone who might not know who you are?
I'm a recovering CPA. I spent my early years in a Big 8 accounting firm and then went out and opened my own firm after I left that Big 8 job. And that's where I realized that the billable hour was a lousy customer experience, started offering fixed prices, and then gravitated to value pricing eventually. But that whole process got me so excited that I started teaching it to colleagues, and then I wrote a book about it. That book took off around the world, and I started spreading the message to not only the CPA profession, but other professions as well. So that's kind of a little bit about me.
Cool. So that means you know your stuff, and I'm very happy to have you here. Where can they buy your books? Where's the best place to go find Ron Baker's books?
Amazon's got them all, and none of them are on audio, unfortunately. But
we need to make that happen. You need to record your own books.
Well, they're professional books, so they just don't have a budget for that. And yes, I would have to do it on my own.
Yeah, I think, but you have such a great voice. I think recording them would be a real gift for many like me who only listen to books. I would be your first Audible customer. I promise.
I'll take that under advisement. That's awesome.
Ron, I know today we're talking about staying at the leading edge for a firm owner. And we've had conversations on value pricing, on subscriptions, which is what your latest book's about. But how does one stay at the leading edge of their firm so they can prosper and grow their firm and increase revenue and increase profitability, but yet serve the clients at the highest level?
Yeah, I think you constantly have to reevaluate your strategy, I think. Peter Drucker wrote a little book before he passed away called The 5 Most Important Questions for Any Organization. And the first one was, what is our purpose? And of course, that's your why. That's the whole Simon Sinek, start with why. And then the second question is, who is our customer? So who are you targeting? And the third question is, what does the customer value? Which, if you think about it, that's probably the most important, but least asked of the 5 questions. The fourth question is, what are our results? In other words, what are our customers' results? Nobody buys a drill bit. They buy a hole in the wall so they can hang a picture or something. So what do we want our customers to pay us for? Which is kind of what he was getting at with what are our results question. And the last question is, what is our strategy? And I think where a lot of firms get hung up is they think a plan is a strategy. And it's not. A plan is something that you can control. A strategy is not something you can control. It's unpredictable. It's got to be done in a world of uncertainty. And, a lot of strategies, strategic thinking, so-called, devolves into financial forecasting in a lot of firms. We want to grow revenue by X%. We want to be this big in 3 years. Strategy is not about, it doesn't start with goals. Good strategic goals are the outcome of your strategy, not its input. And so I think strategy is vitally important to stay at the leading edge and stay ahead of your market. You can't just react to your market. Hopefully you can have an impact on the direction of where customers are going. Think about innovative firms like Apple. Nobody knew they wanted an iPad when they came out with iPad. I mean, it was ridiculed. And now, of course, many people couldn't live without their iPad. So what's interesting about strategy, Michelle, is we can always identify an excellent strategy in hindsight, right? Think about SpaceX. Elon Musk had a great insight. The crux of what he built his strategy around was, why can't we use a rocket? Because he said, look, fuel, the chief insight he had was fuel was a lot cheaper than keep building rockets, right? And now NASA couldn't figure this out, but he built his strategy around being able to figure out how to reuse those rockets. In hindsight, we can look at that and go, well, that's brilliant. Or we can look at Southwest Airlines and say, flying point to point in secondary and tertiary airports is a brilliant strategy. Using the same plane, turning those planes around faster. That's a great strategy. But what's a great strategy in an accounting firm? Because most firms seem to go to the market with the same offering as everybody else. And
they do.
That's why I think strategy keeps you at the cutting edge.
Yeah. So for a firm that might be considering their strategy, and I'm wondering also, Ron, if we can clarify more, like what are companies that had a great plan, yet they thought they had a strategy, but they felt like they were in full control? Can you help identify the difference? Because I still feel that a lot of people, well, Michelle, I had a great plan. I wanted to do subscription. It just didn't work out. Well, no, that, like you said, a strategy is a theory. You don't have control. It's unpredictable, and you're living in a world of uncertainty. But when someone has a plan, can you share the difference and maybe a story about someone that actually had a plan they had control of?
Wow. That's a great question. I have to think about that. But
it's okay. Think about it, because I think it's a really great distinction. However, it's a really confusing thing for, I think, a lot of firm owners who are like, no, I have a great plan. I would say here, for example, what comes to my mind is a sales process. The thing that I hone in on and focus on with firm owners. Having a unique sales experience to back your strategy which might not have control and you might not have predictability and you'll have the uncertainty. However, you have full control over how you're going to communicate with a client, what you're going to say, what's the qualification process you're going to take them through, your engagement letter that you're going to have them sign, or whatever the subscription model letter that you're going to have them sign that they can opt out at any time, whichever way you choose to do your firm based on the strategy. But those are elements that you have control over. So I call that like a sales plan.
Right.
That's how I would differentiate it, because you can't say, okay, well, my strategy and how I'm going to be unique and how I'm going to differentiate myself is like, okay, well, in the accounting firms or the tax firms or the bookkeeping firms, and I know you're going to talk about that in a second, here is how you can stay at the leading edge and position yourself and have a unique strategy. But ultimately, you have to have a plan to execute it. And that plan is the item and the thing that we can have control over. That's how I see it. Did I get that right? Or do you have anything to add?
Well, when I think of strategy, I think of, probably the biggest strategic undertaking was D-Day. General Eisenhower at the time's planned invasion of the beaches of Normandy. And I mean, that was a strategy, and that almost fell apart because of the weather. He had to delay the whole thing by a day because of the weather. They couldn't see cloud covers and all that. So a strategy is risky. I mean, you're peering into something that is uncertain. So maybe, Michelle, we should start with the definition of what a strategy is.
Okay.
And one of my favorite definitions, although there's many definitions of strategy, a good one, I think, is strategy is a high-level approach to achieving an objective by playing strengths against weaknesses in an unexpected way. In other words, it can't be expected. Right? There's got to be a certain surprise element to it, just like there was in D-Day. It's a high level thing, and it's not based on goals, right? It's not based on financial goals or anything like that. It says we're going to go to the market with this offering, and this is how we're going to create value. So let me give you let's try and concretize this a bit more.
Okay.
So a lot of strategists will tell you start with the toughest part of the problem, like Elon Musk did with, how do we get to use the rockets over again? That was a huge problem. Nobody could figure that out. NASA worked on it for years and couldn't figure it out.
Well, and it's also, too, like he started the Tesla, but he's the only one that created the infrastructure for charging with all the superchargers around the country and now world, where now he's licensing the Tesla plug to all of these other car manufacturers now that can now operate on the Tesla charger, even though it's not a Tesla vehicle.
Right. That's right. And he's earning, by the way, $25 billion a year for that.
I bet. I mean, it's freaking genius, which is why I got a Tesla. I know a lot of people don't like it. I said, this is the only car that I can go anywhere and not worry that I have a place to go fill up my tank. You get any other electric vehicle, and it wasn't, they couldn't keep up with the infrastructure that he was so far ahead on.
Right. No, that's a great point. So let's talk about the crux for accounting firms or the accounting profession. What are some of the biggest challenges firms face? And there's 5 that recur when you look at the surveys and all the different ways that we get a hold of this information. And that is obviously recruiting and holding on to talent, right? That's probably number one and will be for a while. Some and others firms say it's tax season compression. So just that grind of the April deadline. And even if you go on an extension, I mean, it's a compressed year. And then the inability to identify and build a proper tech stack is starting to come up into the top 5 issues. Heightened cybersecurity threats. So how do we deal with cybersecurity and insurance and all of that? And then over-regulation and overload for firm owners, especially small firms that can't keep up with all these regulations. Those are the big 5 concerns. Now, how would you build a strategy around that? And I think if you to deal with those issues, those are the big issues. Now, they may impact different size firms differently, but it seems like a lot of us or a lot of firms go to the market with a donkey strategy that basically says increase sales, cut costs, and Make the bastards work harder.
Yeah.
Build more hours,
I've
right?
heard a lot of clients I work with call them workhorses.
Yeah, and it's the donkey strategy, and it's not going to work. And so I just think we need to be creative when it comes to strategy. So I think a good way a good first step is the essence of strategy is choosing what not to do. And Peter Drucker, again, he had this concept of planned abandonment, and he basically had two questions. If you weren't already in this sector, maybe it's restaurants, construction, whatever. If you weren't already in this sector, would you enter it today? And if the answer to that question is no, then what are you going to do about it? And Drucker had this concept of planned abandonment. He said, by holding on to yesterday's successes, we're inhibiting tomorrow. We're not putting our best resources on tomorrow. We're not staying at the leading edge, if you will. So he wanted you to abandon yesterday's, even if they were successes, because tomorrow's going to be different because markets change. And it seems like humans have a natural discharge, but firms don't. They'll hold on and cling on to yesterday, and that inhibits them moving forward.
So, what do you recommend and what do you see for firm owners to stay at the leading edge? Having the positioning right, having the strategy right, and being able to identify what not to do.
Right. And I think, that, and of course, a lot of this is driven by your purpose. So you start there, but we're kind of taking that for granted. When you start getting into strategy and positioning, you got to really narrow down. And I'm not just talking so much about niching. We can have niches, you can be in the medical space or the restaurant space or the construction space. But even once you do that, I think you need to narrow down even further. Like some CPA consultants, for example, will only work with solo firms of a given size, say between $250,000 to $1 million. Anything about, if there's another partner, they don't take that customer on. Now, yeah, you can say, well, that limits their market. Well, that's true, but by being narrow and being focused, you're able to speak and understand that segment's particular needs and issues and what keeps them awake at night and what their possibilities are. And I just think that so many CPA firms try and be all things to all people. It's almost like if we were veterinarians, we'd also say on our sign that, we're a vet and a taxidermist. So either way, you get your cat back. And that doesn't work because strategy is all about trade-offs. You can't be all things to all people. In other words, you have to put yourself in a box, because if you're not in a box, there's no strategy. If you're diversified and you're kind of taking on all comers or customers in different industries, that's not a strategy. That's a lack of a strategy. And it just shows that you don't know what you're doing, I think. And yet a lot of firms try and do that. I mean, I go out to some firm sites and I look at the industries that they say they serve and the services that they offer. And they do audits and they do tax and they do IRS representation and they do consulting and advisory and all of this and in all these different industries too. And I look at it and go, they're a firm of 40 people. How could they possibly have expertise in all of these areas? There's no way. And that's a problem from a strategy and a positioning standpoint.
Yes.
You can't be McDonald's and Morton's. You have to choose, because a brand can only stand for one thing. That's it. I mean, you can't sell Chevys and Rolls Royces out of the same dealership.
No, you cannot. So let's say, they narrow it down. If you're going to work with solo firms or firms, or businesses above 5 million, whatever you choose, they choose the industry. All of that is done. What would be the next steps to really hone in on being able to really make a difference, be at the leading edge, and have the positioning in a way that is they stand out, right? Just like Elon, he stands out. He positioned himself so well that no one really can keep up with him. And I know one of the things we've talked about in previous episode is subscription model, but what do you recommend would be next after figuring out what trade-offs you're going to have? Because like you said, strategy is about trade-offs. You cannot be all things to all people. So once we eliminate some of that, what would be the next steps?
Well, I think this is where subscription really brings us to to the space where we can go to the market with a very different offering. I have a basic philosophy: when everybody's zigging, I want to zag, right? Everybody's buying, I want to sell, type of thing. And everybody's out there talking about CAS and talking about tax planning, advisory services, all of this stuff. If you really want to implement a strategy and you really want to go to the market with something that's uncommon, I think that one of the best things you can do is change your language. And the subscription model enables us to do that. It not only insists that we go to the market with a plus offering, but that we change our language around that offering, kind of like what Walt Disney did when he built Disneyland. It wasn't an amusement park, it was a theme park. It didn't have rides, it had attractions and adventures. He didn't have staff and carnies. He had cast members, and they were on stage or backstage, and they were putting on a show, and they were selling happiness. I mean, this language persists in Disney parks around the world to this day because that was an uncommon offering. And by the way, the four largest theme park or amusement park owners at the time that Disneyland was in planning said it would never work. It would never, ever work.
Really?
You'll never be able to build a park that has only one entrance. You've got to have an entrance on each side. You can't have all these things like Main Street because they don't produce any revenue. You're spending way too much on landscaping. Nobody's going to notice the cleanliness of the park. So stop hiring so many janitors. I mean, Disney did everything completely different, completely different. And he charged dearly for it, although not at the time. The time his pricing was kind of neutral. Now today it's more of a skim pricing strategy, but it was a neutral pricing strategy.
What
but
is skim pricing, Ron?
Skim pricing is when you only care about, skimming the cream off the milk, kind of like Apple, kind of like FedEx. You're not about building market share. You don't care about market share. You care about creating value and capturing a good portion of it. So Porsche, BMW, Disney, they're all skim pricers. Whereas a more neutral pricer is somebody like Toyota, because Toyota doesn't emphasize pricing in their advertising. Yeah. They emphasize it's got a lower cost of lifetime ownership because it's going to be worth more at trade-in. It's quality parts, blah, blah, blah. But they hardly ever talk about price. So, I mean, that strategy is very unique, what Disney did. And I would also point out that what the DPC doctors did, the direct primary care physicians did, and the concierge doctors before them, they went to the market with an uncommon offering. And they didn't know if it was going to work. They didn't know if customers were going to go for it because they don't take insurance. Everybody equates, going to the doctor with filing an insurance claim or having insurance pay it and just pay your copay. These outfits don't take insurance, and yet they're overwhelmed with demand for for customers that want to get into them. They all have waiting lists, and that's because they went to the market with an uncommon offering. They basically made a promise with patients: whatever you need that we can do. There's the constraint, and we can come back to that. But whatever you need that we can do as a general physician, you're covered. You're covered. We're not going to charge you per service. We're not going to be on this fee-for-service treadmill. We're just going to take care of whatever you need. Now, if you come to us with something that we cannot do, like cardiac surgery or oncology services or whatever, we're going to refer you to a specialist, that's part of our network, kind of. And we'll even quarterback those relationships. But for whatever you do need that we can do, you're covered. And by the way, what they can do is expanding every year. That's the plus in the offering. They're adding, blood lab work, or they're adding diagnostic equipment or 23andMe analysis. They're constantly plussing the offering, and the consumers are eating it up because it's convenient, it's easy, It's 24/7, 365 access to your doctor via text, email, FaceTime, whatever. And patients love it because it saves them time. And I
Yes, it
think we
really
waste
does.
our customers' time by sending them 200-page organizers. That's a crime. We should
It is
know.
a crime. I hate that
We
thing every year. I get it. I'm like, oh
It's
God.
amazing because you know why it's a crime? Because your accountant or CPA should know everything that you're going to fill out. They should know if you got married, sold a house, bought a vacation home. What they should know all that because they should have multiple points of contact with
Conversations
you
with you. I
throughout
totally
the
agree.
year. And the reason they don't have those conversations is because they have too many customers. And therefore, a lot of these issues that we talked about, the five big issues of retaining talent and attracting talent, people join this profession to help people. And I can't help people if you put me in the back room and expect me to do 350 tax returns in a year. That's not why I became a CPA. That the medical profession has a very, very profound term for this. People talk about burnout. It's not burnout, Michelle. It's moral injury. This is not what we signed up for. I didn't become a CPA to bill the most hours, do the most tax returns, work the most days. I became a CPA to help people, and I can't do that if I'm on
Under
this
these constraints.
hamster wheel. And
Right.
that's moral injury. And that, I think, is the bigger problem than burnout.
Exactly, because the outcome of the way things have been going is burnout, but that's not the actual problem. So, if you were to say, how does an accounting, tax, bookkeeping firm owner turn their firm into Disneyland and create the plus offering and create the concierge doctor approach? What does that look like for a firm owner today that wants to make this change and say, I am going to completely flip my firm on its head, upside down, and go drastically and make these shifts?
Well, this is going to sound challenging, and I don't think it's that challenging. But if you're really serious about pivoting to subscription, I think the best thing you can do is start up another firm and have it gradually cannibalize the old one. Because I think this is such a new model and a new mindset. And it requires a different offering. It requires different pricing. It requires different KPIs, even different accounting. The income statement for a subscription firm looks different than a typical income statement for a regular value pricing firm or hourly billing firm. Everything about this model is different. And therefore, starting up a new company where you have a clean slate, you can do things the way you want and not be inhibited by legacy systems.
Yes.
I think that's your highest odds for success, and that's what we've seen so far is the highest odds of success with subscription is launching a new firm.
Okay. And I want to hear about the firm or the story, and you can make up the name of that you feel has made the pivot. They start a new entity and they are truly staying at the leading edge, and they have completely shifted their strategy and positioning. And I'd love to hear the story on what they're doing today versus what they were doing before. So someone listening can say, I can do that too.
Okay, now keep in mind, Michelle, we don't have a lot of living examples of this in the CPA space. This is still a very, very nascent model in our world, but there are some shining examples, and I'm thinking of one, and most people
Okay.
know this gentleman, but I won't give
You
out the
can make up
name.
a different name. Yeah.
He had a very traditional bookkeeping, so you would say CAS, and tax practice. And of course, he read implementing value pricing, and he moved from hourly billing to value pricing, and he refined that in this firm he had, and he got really good with value pricing. He swore by it. He taught it to other accountants, and then he read Time's Up, and he said, I think this makes more sense. This is where the future's headed. This is where I want to be. This aligns more with how we're going to attract future talent, really bright knowledge workers into our firm. And so he planned to pivot to subscription. Now, he actually didn't create necessarily a new firm. He
Okay.
kind of did a hybrid. But what he did do is he reevaluated his strategy, and he asked himself Peter Drucker's planned abandonment questions. If you weren't in this industry today, would you enter it? And if the answer is no, what are you going to do about it? And he answered that question with respect to his tax practice. He said, no, I would not do this again. It's a pain in the butt. We have 500 returns that we do every year. We get just caught like quicksand in doing, these compliance 1040s. And he says, it's killing us. He jettisoned it. He sold it. Wow. Before he made this pivot to subscription. So now he's a pure CAS practice, full service, some advisory. He's got advisory in there as well. And he kind of did a hybrid where he said to his existing customers, we are moving to the subscription model. We are still going to give you a plan that is very similar to what you had under the old firm. And all new customers are going to be put on like a DPC, all you can eat subscription price. And of course, the prices went up for the new customers. It went up kind of dramatically, like 2-3 times. So there's going to be a transition there with his current customers. We're going to and we're waiting to see, how many of them are going to stick with it, how many are going to move up to Plus at some point. How's he going to deal with that? He's working it out. He's kind of, building the plane as he flies it. But he loves this model because he thinks it's easier to sell to the customers. It's a better offering. And you change the conversation with the customer because no longer are you talking about services. You're talking about, we can guide you through these transformations. We can take you from where you are to where you want to be in your business, in your personal life. And, that resonates with customers. I'm not buying the drill bit. I'm buying the hole so I can hang a picture. He's talking about hanging the picture, not drilling the hole. And that changes the conversation. It changes the language. And that's what strategy is all about, in my mind, is doing something different.
Yeah,
in
really
an unexpected way.
So I want to play devil's advocate because I know some firm owners ask you this, and I always think we can't hear it enough. But let's say someone makes this shift and they're like, okay, I'm going to be like the DPC doctors. I'm going to offer everything in the star. Well, I'm already overwhelmed and burnt out, Ron. Like if I open up the floodgates, then they're going to take up all of my time. How could I possibly do that without charging?
Well, yeah, I want you to get a 2 times to 4 or 5 times multiple on what you're charging now, which means you're going to have to shed some customers like this person did. He got rid of his tax practice, and he got rid of some low value CAS customers too, by the way, that didn't fit the profile that he's now going after. So he's refocused in there too, but you've got to raise your prices and have less customers. So you always have spare capacity to service them. And then when you do that, you can have more touch points with them. So you know everything that should be in the organizer already. You don't have to send out organizers because you're talking to your customers on a regular basis.
You incorporate the questions and the organizer in your conversations, and you gather the data on your own. So people like me don't even need to see the organizer. And then they see that you're very valuable because they don't have to dread every January, February, or March, whenever you send that thing out to us. And then we go all frantic because most people don't like to fill it out. It's daunting. It's exhausting.
It's a time waster.
That pain.
It's a time waster.
It is a time waster, but it's also that you're eliminating the pain. And if we're going to offer a transformational offering of service, you're transforming someone's life the day they don't have to fill that out. Yeah.
That's exactly right. I think the worst thing we can do in today's world, where I can go on Amazon one click and get something the same day on my doorstep, is we waste our customers' time, either through our bad portal experience or sending them an organizer, or just what a pain in the butt it is to get a hold of us and get a return phone call or whatever. DPC docs don't have this problem because they don't have 2,400 patients. They have 600 patients. And they always have capacity. They'll come to your home. They'll come to your office. If you go to their office, there is no waiting room. And they won't spend 5 minutes with you. They'll spend on average 45 minutes with you, sometimes up to 2 hours with you, because they're not overwhelmed with patients. So they can help you get your weight loss or your exercise goals or your nutrition goals. They can help you with all those things to keep you healthier. not just cure you when you're sick. And I think CPAs are privileged to be in the same position. We can keep our customers financially healthy, not just solve their problems, but help them move to new places, help them achieve new potential and pursue opportunity. We get so caught up around solving problems. What keeps you awake at night? What's your problem? Blah, blah, blah. Well, problem solving is a big part of what we do. But, and this is a big but, if all we're doing for our customers is solving their problems, we're just reverting them back to the status quo. We're not advancing them.
True.
And we are in a privileged position to be able to advance our
and
customers.
We need to advance and we need to transform the clients' lives. And I
That's
think
it. That's the unique offering, Michelle. That's a new strategy
in itself. Yeah.
And you know what? People, when I tell that to CPAs, who are, of course, the practitioners in this field, they don't like it.
I know.
But I say to them, I want you to think about how your customer would respond to it. Who are you selling to? Your peers and colleagues who poo-poo every new innovation, just like they did with value pricing over hourly billing, or are you selling to the customers? You're selling to the customers.
Yeah. And it's about how they feel, and it's about their experience. And I think you shared it so clearly. And this is truly how an accounting, tax, bookkeeping firm owner can stay at the leading edge and really understand the difference between the strategy and the plan and know which one that sometimes when you make the new strategy, you're going to be in the unknown and you're going to be in this, area of trial and error. But we have to be getting comfortable being uncomfortable. And I think when you start to offer transformational experiences, that's what you can create. So, Ron, thank you so much for being here with us on the Abundant Accountant podcast. It's always such an honor. And I wanted just to make sure, is there anything you want to add that we haven't talked about for our conversation today?
No, I think that what you just said was a great summary. Strategy is not a choice from alternatives. It's designed. So you have to design. I know we've talked about the DPC docs and all that, but you take that basic model, but you're going to tweak it for your firm, but it's designed. And I don't think we pay enough attention to our strategy when we go to the market. We tend to go to the market with best practices.
Right.
And if all you're doing is adopting best practices from other firms, you're by definition always behind.
Yeah.
I don't want you to be behind. I want you to be a leader like Elon Musk.
Yes.
I mean, he punched Detroit in the face. They didn't come up with EVs. Yeah. He did it. And of course, now they're all in, right? Every one of them has got their own EV division now, but he's way out in front of them because he went to the market with a unique strategy.
And he was willing to get uncomfortable and be okay with the uncertainty and the unknown. And I think that's a really hard thing for firm owners to become comfortable in that space. But I think that is really what will help have you stay at the cutting edge and the leading edge of your industry and being able to be unique and different and never have to think about your competitors or the firm down the street or any of your peers. This is how you can be different and stay ahead. So thank you so much, Ron, for being here with us. It's always so fun to have you and an honor, and I thank you.
Oh, always great to talk with you. Thanks again.
Thank you all so much for joining Ron and I today on a very amazing episode here at The Abundant Accountant. And it's truly an honor to be here and have Ron on the show and talk about subscription and really be at the leading edge of your firm. But if you want to focus on a plan, the thing that you have full control over, because you are a smart, hardworking bookkeeping, tax, or accounting firm owner, and you want to really get your fees up, change to subscription, but understand that you need a new plan to make that happen, then make sure to head on over to theabundantcall.com to book a call with me and my team. The firm owners we work with are charging premium fees. Some are doing subscription model. They're even doubling, tripling, and quadrupling their fees by following a very much simpler method that I've created here at The Abundant Accountant. It allows firm owners to charge fees with confidence, get paid up front and first all the time, never have accounts receivable. so you can have total financial security, more disposable cash, and the freedom to travel and do what's really important to you. If you're really serious to make the change and focus on your plan and be the leading edge in your industry and separate yourself from all of the competition, head on over to theabundantcall.com. My team and I look forward to speaking with you. Have a beautiful day, and we'll see you in the next episode.